Hi everyone, this is Alan Rosinski of Metro Manhattan Office Space. Good afternoon. I wanted to comment and provide another perspective on a video posted by Louis Rossmann a few weeks ago, where he mentioned that the availability rate for retail commercial space on Madison Avenue, the area known as the Gold Coast, has reached 39% according to data from Cushman & Wakefield. I've lived on the Upper East Side near Madison Avenue since 1984, and I've been in the commercial real estate brokerage business since 2004. So I'd like to make some comments and observations, both from the perspective of a commercial real estate broker, as well as a longtime resident of the Upper East Side. There are so many factors that contributed to creating the situation that we see on the ground today. The primary factor, in my opinion, very simply, is the high level of uncertainty that faces both tenants and landlords in New York City. Many businesses that have gone under did not simply have a modest drop in their revenue, they often lost their entire revenue stream. The failure of New York's small retail businesses during the pandemic wasn't caused by rents being too high, even though it was certainly a factor that accelerated their demise. It's very important to realize that while rent is a major expense for a business, it represents only a portion of their total expenses. The largest expense by far is the cost of labor and payroll for employees, followed by rent, cost of merchandise, recurring operating costs, advertising, etc. Ideally, the company's employees should generate revenue that exceed their own pay and is at least sufficient to pay all other expenses. This is how a business stays profitable and flourishes. The company is then able to reinvest those profits back into the business, which makes it possible to grow and hire more staff. If a business has 5 or 10 full-time employees, that means that it's profitable enough to pay them and afford rent at the same time. Now, if you're looking at a commercial retail space that costs $55,000 a month, and you project having 3 or 4 employees who sell or prepare inexpensive items for people to walk in and buy, then the math is likely not going to work out. The reason why locations such as Madison Avenue are considered premium is because historically they've catered to high-income residents who live in the vicinity, as well as wealthy tourists from abroad and other regions of the U.S. Profit margins for luxury goods and services are generally higher, and this kind of historical precedent tends to linger. Some companies on Madison Avenue were even willing to operate those locations at a loss simply because the boost to their global image as brands has been worthwhile from a business perspective. One of the many reasons why landlords are reluctant to reduce prices on Madison Avenue is because it would damage the brand of buildings in that area. Think about how protective corporations are when it comes to their brands, even the very platform you're watching this video on. Landlords are business owners, and they want to protect the prestige of their assets. You may personally argue that a lot of that prestige has already been lost, but many landlords are willing to wait things out to assess the post-pandemic market conditions. Ultimately, those spaces will not stay empty forever. Now, another unfortunate reality is that the kinds of businesses that tend to make a city look vibrant and exciting in people's eyes are businesses that don't tend to be overly profitable. You won't look at a street full of law firms, doctors, accountants, and chiropractors and think of that as a vibrant street. Instead, you would picture restaurants, affordable clothing stores, gift and trinket shops, entertainment venues, art galleries, etc. Unfortunately, those types of businesses require stability to operate profitably, and that's what the pandemic has taken away. If a business is barely breaking even, it is a business at risk. Any unforeseen event, a market shift, or both in the case of the pandemic, would quickly cause it to go into debt. Unfortunately, many retail businesses were already in this situation before the pandemic. So why did business owners choose to keep them operating anyway? People often have their reasons. For example, a bookstore could be making little to no profit, but perhaps the owner has other assets, and they're simply enjoying the feeling of engaging with their community. Or perhaps their business is relatively new, and they're still trying to establish a reputation while winning over customers from competitors. Other times, a business owner may simply care about their employees, and they're unwilling to shut down their company, even if it's no longer profitable. Marginal businesses often simply wait and hope that down the line additional sources of income will materialize. These are all common real-world scenarios. A lot of situations are sustainable during normal times when a business receives steady patronage from customers, but the extent of damage from the pandemic has caught everybody off guard. Struggling businesses likely had little to no financial buffers to rely on, and it didn't take long for them to fold. COVID acted mostly as a catalyst for business disruptions that happened in New York City, and that resulted in the vacancies that we see today. Now, let's talk about the two questions on everybody's minds. Why haven't New York City's landlords lowered their asking rents as much as people were expecting? And second, how are they able to do that without getting into financial trouble themselves? You may have already heard that landlords who own buildings with mortgages are often bound by terms that they've signed with their lenders, which limit their ability to lower rents. This simply has to do with the fact that the value of a building as an asset is calculated from what is effectively market rent, the amount that tenants are willing to pay for space in that building. And that amount, the market rent, is determined by supply and demand. Let's say the demand for commercial space is low, and that in order to lease space, the landlord needs to cut the rent. In the eyes of the lender, this reduces the value of the building. So to use a very simple example, if the landlord has a $3 million mortgage on their building and the bank determines that they have reduced the value of the building, they will need to pay off part of the $3 million mortgage. As to how the landlords are able to keep spaces empty for so long, there are several possible scenarios. For one, if a landlord is not able to make a full mortgage payment on a property because of vacancies, they are able to pay what they can and add the balance back into their mortgage. Of course, they pay interest on those amounts, but it may be a much more favorable option compared to defaulting. The other point is that many landlords own more than one building. From a bank's perspective, they care about the performance of their total portfolio. If there are a few buildings that are underperforming, but most buildings are doing well, then it's not a significant problem, and the landlord will not be in default. Landlords can also choose to refinance buildings with terms that are more favorable to them, which would lift minimum rent restrictions. But to do so, they would need to come up with additional capital, which they could conceivably borrow, assuming they have strong credit. It would be a last resort for many landlords, but it would be easier than getting their mortgage terms modified. The reasons for that go beyond the scope of this video, and I'm not an expert in this area myself, but you are welcome to Google the inner workings of commercial mortgage-backed securities if you'd like to read more about these details, and I warn you, it's extremely complicated. Now, all that aside, here is a critically important point to make. Lowering rent is not the only way in which a landlord can offer value to a tenant. I would have liked to give you some great concrete examples from various lease transactions that Metro Manhattan office space has completed this year, but unfortunately, in most cases, I can't disclose the terms of those leases. As a broker, what I do see is that there is much more in the way of concessions that equate to substantial discounts for a tenant. Concessions in the way of free rent and perhaps some base level work for a retail store. When the value of concessions is factored in, the discounts are considerable. Whether a tenant receives a rent reduction, free rent, or a build-out allowance, these concessions are certainly worth real money. Offering tenants free rent does not trigger restrictive mortgage covenants that many landlords are bound by. This is also one of the reasons why some landlords may choose not to publicly display the costs of a particular space that's being offered for lease. Regardless of actual rent, which they may not be able to reduce, landlords are still able to negotiate favorably with tenants. This also makes for a good example of how experienced commercial real estate brokers, like myself, provide value for tenants. You are simply not going to find out which landlords are going the extra mile for tenants simply by searching online. Commercial real estate is still very much a handshake business where relationships with all parties involved really matter. Having the timely expertise of an active commercial real estate broker can greatly facilitate a property search, and it's always free for the tenant. Now we've talked about buildings with mortgages. How about buildings that are mortgage-free, where a bank has no say regarding rental pricing? A significant portion of New York City's buildings are in this category. So why are landlords unwilling to lower their rents in that situation? You can probably guess what the possible answers are. No one wants to pull a trigger that would collapse the property values of a particular neighborhood. For example, if you could rent out your own house knowing that it would be worth half as much after the rental, would you still want to do it? At the very least, I think you would hesitate. If the value of your house collapses, the values of nearby properties go down, and your neighbors won't be too happy with you. Even though you own the property, it's obviously in your best interest to keep its value high. Would the situation remain the same forever? Of course not. However, it's likely to last for a while longer. People never complain about the value of their own home going up. They're only bothered when they have to pay more for a new one. We all try to save money and prevent our assets from losing value, whether they're physical assets, investments, intellectual property, cryptocurrency, etc. Now let's imagine a scenario where New York City's commercial rents were to go down starting today. Do you think this would result in an influx of businesses looking to rent spaces all over New York City? If you're a native New Yorker, your gut feeling is probably telling you that it's not that simple. The reality is that there are other highly significant factors at play which are keeping people and businesses away. For one, it's the rising crime rate and reduced sense of security that have caused many families who used to spend a lot of money as patrons of local businesses to leave New York City. This is a huge problem. Crime is not compatible with growth in the business sector. Given the general uncertainty that already represents a significant risk to businesses and landlords alike, absolutely no one is welcoming the increased crime rate as yet another unknown variable that could derail any plans for small business. Large corporations are much less affected by crime and social unrest. It's the small, ground-level retail businesses that always take the brunt. It may cost a tenant hundreds of thousands or millions of dollars to fully outfit a new space for themselves. It's a big risk if social and economic certainty simply aren't in place. From a landlord's perspective, what if inflation roars back and the landlord is stuck with fixed annual rent increases that don't keep pace with rising operating costs for their building? This is exactly what happened to landlords in the 1970s, and they took a beating. As a result, both sides are still very hesitant. In my opinion, this is the primary reason why so many spaces are staying empty. The next New York City mayor will be able to do a lot to remedy these problems and create confidence within the business community as well as for landlords and tenants. So let's hope that this happens. The candidates certainly seem like they have potential, at least on paper. Manhattan is far from being dead, and a lot of activity is starting to come back to different neighborhoods, even lower Manhattan. People are reporting lines at restaurants, and tourism is starting to come back as well. Now, to close this video off, I very much enjoy Louis Rossmann's straightforward and open takes on New York City's commercial real estate from his perspective as a business owner. And I sincerely hope that he keeps making them. But I was somewhat surprised by his characterization of people who live on the Upper East Side. Some people in the area live in inexpensive buildings in rent-stabilized apartments. Many people live in small, inexpensive rental buildings that are not by any means luxurious. There are many couples who have purchased cooperative and condominium apartments who work hard and struggle to meet their mortgage obligations. Many of these people visit the various museums, galleries, and shops in the area. They walk along Madison Avenue and often take strolls in Central Park, which has become extremely crowded during the pandemic. While there are extremely high net worth individuals living in luxury cooperative apartments and in townhouses, these people attract a lot of attention. They are far from everyone on the Upper East Side. This was a longer video for me, so if you still enjoyed it and made it to the end, I would appreciate it if you left a comment. I've recently purchased a few bits of camera-related accessories, and I'll be adding more content to YouTube in the near future to include more street-level footage. Please subscribe to my channel if you'd like to see that, and let me know in the comments if there are any areas in particular that you'd like me to discuss. I'm open to your ideas. Thanks for watching, everyone. If you found this content interesting or helpful, I'd be happy if you subscribe to my YouTube channel. You can always find me on Twitter. My Twitter handle is @MetroManhattan. Until the next time.